Hello and a warm welcome. You've joined us here on ET Now. I'm Ashesha Advaryu, and first up, let's take a look at how US markets ended in Friday's trading session. And clearly, it turned out to be a good day for US equity markets on Friday. We had most of the indices which ended in the green. Dow Jones Industrial Average, in fact, ended nearly 363 points higher. That's 0.7% higher for the US equity markets. S&P 500 futures ended 0.2% higher, and we had Nasdaq 100 futures which ended 0.4% in higher on Friday. Meanwhile, let's also take a look at what US futures are doing this morning, and that is also showing a rather good picture. No complaints over there. Dow Jones futures are trading with gains of 0.2% as we speak. S&P 100 futures too are gaining nearly 18 points, and Nasdaq futures trading with gains of nearly 0.5% in today's trading session. So clearly, Friday turned out to be a good day for US equity markets, and that trend is continuing today as well, and that is getting reflected in US market futures this morning. Meanwhile, let's also take a look at what commodity markets are doing, and we have seen a lot of action off late over here, especially on the back of Trump comments. We have WTI crude, which is back above that $89 per barrel mark. Brent crude, that too has seen some bit of increase over the weekend. We have oil recovery on the back of some bit of optimism that came in that perhaps a deal between Iran and Israel could be signed, and that is the reason we did see some bit of recovery. But again, that has seen a spike up in today's trading session. Meanwhile, as far as the precious metals basket is concerned, gold is hovering near that $4,500 per ounce mark. Remember, gold prices have cooled off nearly 13% since the start of the war, but now they've become stagnant at that $4,500 per ounce mark. Meanwhile, as far as silver is concerned, we've seen a lot of action over here as well, in line with gold. But of course, most of that action has now stagnated over the last few days. Shifting focus to Asian markets then, and it is turning out to be a good picture for Asian markets as well. First up, let's talk about Nikkei, that's the Japanese market. That index is up more than 1% in trade today. We have Hang Seng, that's the Hong Kong market, up 0.5%. And Shanghai is also holding on to gains of 0.4% in today's trading session. So clearly, Asian markets look good, but Nifty implied open is suggesting a slightly muted start for Indian equity markets. Nifty implied open is now sitting with a decline of nearly 29 points. So clearly, we could see some bit of negative pressure in trade today, but despite that, Asian markets clearly are doing well for themselves in trade today. But shifting focus to a couple of global stories then, and just days after reports suggested that US and Iran were close to extending the ceasefire, US President Donald Trump has poured cold water on expectations of an imminent agreement. Trump said he is not in a hurry to finalize a deal, emphasizing that Washington wants a stronger agreement that permanently prevents Iran from obtaining a nuclear weapon. The comments suggest negotiations remain active, but the timeline has become more uncertain. Shifting focus then, just a week after the much talked about visit to Beijing, the US has now moved to plug a loophole that may have allowed Chinese firms to access advanced AI chips through overseas subsidiaries. The clarification extends licensing requirements to Chinese headquarters entities operating outside China, potentially impacting access to high-end AI processors such as NVIDIA's Blackwell chips. Moving on then, SoftBank has unveiled Europe's biggest AI infrastructure commitment yet, with plans to invest 75 billion euros in France, including 45 billion euros over the next 5 years. The project aims to build 5 gigawatt of AI data center capacity, positioning France as a potential European AI hub at a time when Europe is struggling to keep pace with US and China in the AI race. And Berkshire has agreed to acquire Taylor Morrison for about $6.8 billion in cash, marking the first major acquisition under CEO Greg Abel since he succeeded Warren Buffett earlier this year. The deal expands Berkshire's housing footprint and signals growing confidence in the long-term US housing market despite elevated mortgage rates and affordability concerns. And shifting focus back to India then, and the boys have done it again. Royal Challengers Bengaluru are IPL champions once again. Led by Rajat Patidar, Bengaluru capped off a dominant season with a commanding win over the Gujarat Titans, chasing down 156 in Ahmedabad. And at the heart of it all was Virat Kohli. The Chase Master smashed 75 and brought up the fastest 50 in his IPL career, sealing the title and walking away with the Player of the Match award. With the victory, RCB joins the elite company of Chennai Super Kings and Mumbai Indians as the only teams to win back-to-back IPL titles. As the final rounds were struck, Ahmedabad witnessed the coronation, but the real celebrations erupted hundreds of kilometers away. Bengaluru turned red and gold, with fireworks lighting up the night sky and chants echoed through the streets. A city that waited decades for one title is now celebrating two titles in a row. On that note, we need to slip into a very short break. More news and updates will continue on the other side. Welcome back. You're still tuned into Market Cafe right here on ET Now. And let's get stock specific. Several stocks will be in focus today, and one of them, of course, will be Wockhardt, because the company has now secured a major breakthrough after receiving US FDA approval for Zanish, which is a novel antibiotic for treating complicated urinary tract infections. The approval opens up an addressable market estimated at about $9 billion globally. Meryl is now joining us to take us through what it means for the company and why the stock is likely to be in focus today. Meryl?
Yes, Zanish has been in focus for the past few days on the back of the major approval the company has recently received from US FDA for its novel antibiotic treatment Zanish, which is developed to treat complicated urinary tract infections and including severe kidney infections. Now, coming to why this approval is such a big deal for the company, Zanish actually targets multi-drug resistant bacterial infections, which is one of the biggest healthcare challenges in the global landscape today. As a result, the market opportunity for this drug as well is quite substantial. We're seeing an addressable market estimated at around $9 billion globally, which includes around $7 billion coming from the US and the Europe. In India as well, drug-resistant infections are estimated to cause around 10 lakh deaths every single year, which is only highlighting the urgent need for even more treatment options in this space. Coming back to now Zanish, management has said that the drug has delivered a clinical cure rate of nearly 97% in clinical trials, which is among the highest that we've ever seen, not ever seen, but that we've seen in the past 10 years at least for US FDA-approved novel antibiotics. And in severe bloodstream infections, response rates for Zanish were almost double, which was seen with a commonly used antibiotic called meropenem. Now, for Wockhardt, this is a strategically important drug. The company is expecting market exclusivity in the US up to 2038, giving it quite a long runway to commercialize the product further. Even a relatively modest contribution from Zanish of around $20 to $30 million in the year FY27 will be more than transformational and could be very meaningful on Wockhardt's current revenue basis. This comes from a time where the company's revenue is already seeing improving. Fourth quarter revenue was seen jumping nearly 30%. EBITDA margins as well expanded quite sharply. And the company even swung from a loss to now a profit. Wockhardt's innovative products as well already contribute around 1/4 of its total revenues. And this FDA approval further strengthens Wockhardt's transition from a traditional generic player to now an innovation-led pharma company. And this is why the stock has seen the reaction that we're seeing in trade. The question now shifts, however, to how fast Wockhardt can convert this into hard revenues, given the structural challenges that are present in antibiotic monetization, as well as the go-to market model which is chosen for the US market. This, coupled with the company's own balance sheet capacity, is what will determine whether FY27 and 28's revenue potential and earnings will justify the current re-rating that the stock has seen in the past few days. In the past week alone, the stock has surged over 28%, making this one quite an important development to watch for Wockhardt.
Meryl, thanks so much for joining us with all those details. But shifting focus then to the aviation sector, then Interglobe Aviation reported its numbers on Friday post-market hours. And while yields remained under pressure and costs moved higher in FY26, the key takeaway from Interglobe Aviation's con call was that management's confident of sharp recovery in FY27. Capacity disrupted by the West Asia crisis is rapidly returning, and the street remains constructive, with all major brokerages reiterating their buy ratings. Avi is now joining us with the con call highlights and what brokerages have to make of Interglobe Aviation's earnings.
Talking about Interglobe Aviation numbers that for the quarter gone by, they are a poor set of numbers when you compare it on a yearly basis, but they are much better than what the street was expecting. the margins have contracted sharply and they've posted a loss of around 2,500 crores. Talking about the capacity, they have expanded by 3.5% in the Q4 and around 9.5% for the year on a full year basis, despite the Middle East crisis. Talking about the passengers and load factor have both gone down. When we talk about the yields, have declined both annually and sequentially, which indicates that although IndiGo is flying more but is earning less per seat. Talking about the key headwinds, the rupee depreciation and the changes in labor law have been the two major biggest hits to the profitability for the year gone by, with around 4,800 crores of losses, forex losses that have been recorded in the quarter gone by, and around 250 crores of loss recorded due to the change in labor law. The two biggest positives for the company that we can see is the fact that the board has approved an investment of $450 million for the acquisition of aircrafts, which indicates their belief in the strength of their fleet. And the other one being that they've tripled their hedging target to $3 billion, which currently stands at around $1.3 billion. Talking about the guidance for yield in the upcoming quarter is expected to improve in the mid-teen range. And the company is seeing the demand to be largely inelastic and the market is accepting higher rates. Talking about the capacity guidance, which is expected to improve in the range of 3 to 4% with international capacity redeployed to the domestic markets. Talking about the brokerage targets, the Goldman has given it a target of around 5,100, with Citi giving it a target of 5,200. Motilal has given it a target of 5,600, while Elara has given it an ambitious target of 6,000 rupees.
Okay, Avi, thanks so much for joining us with all those details. And it was a colourful Q4 for Asian Paints as all segments beat street expectations. The management expects steady demand conditions in FY27 and they are maintaining their margins guidance between 18 to 20%. Rabinder is now joining us with the con call takeaways and broad brokerages are making of Asian Paints strong results in the fourth quarter.
Well, Asian Paint has announced the Q4 earning on Friday during market hours, and company reported a very good set of numbers in Q4 FY26. And if we talk about the con call highlights of Asian Paint, the management expect high single-digit volume growth for FY27 between 8 to 10%, and management aims to maintain its EBITDA margin guidance of between 18 to 20% for FY27, leveraging calibrated price increase, cost efficiencies, and product mix improvement. And increase this management also highlighted that they have seen an increased stocking was observed at the end of Q4 FY26 due to price increase announcement, and pipeline stocks are expected to rise in first quarter of FY27. And on the competitive intensity front, management say that the competitive intensity is expected to remain strong due to consolidated players, new entrants, and existing players. And going forward, the gap between volume and value growth is expected to remain in the range of between 3 to 4%. And on the segment wise, they say that the industrial coating to outperform the decorative segment, and they have taken a price hike between 10 to 11% since the Middle East war. And management highlighted that they may take further price hike depending on the situation, and they are optimistic on the demand due to prolonged festive season in FY27. And if we talk about the brokerages, then brokerages has also turned positive, and major brokerage house has increased the target price for Asian Paint. Novama has maintained the buy rating with target price rupees 3,470 as compared to earlier target price rupees 3,390. They say that the industrial coating remain a key growth drivers for the company, and they expect the value to grow ahead of the volume growth. And Citi has also maintained the sell rating with target price and high target price rupees 2,500 as compared to earlier target price rupees 2,300. Apart from this, UBS, JP Morgan, Nomura, GS, and InCred has also increased the target price. InCred has upgraded the stock to hold from reduce and hike target price rupees 2,900 as compared to earlier target price rupees 2,540.
Okay, Rabinder, thanks so much for joining us with all those details. But meanwhile, let's also shift focus and talk about a couple of other earnings then. And we have Inox Wind that will be in focus, and this counter reported weak set of numbers for the fourth quarter. We had revenue that saw a decline of about 2% on a year-on-year basis, and EBITDA saw a sharper decline of about 21% on a year-on-year basis. In fact, the company also missed its FY26 and the fourth quarter guidance as well. However, the company was able to meet its margin guidance for the fourth quarter. So yes, all in all, weak set of numbers. The company has missed its guidance. Inox will be in focus on the back of that. Shifting focus to Premier Explosives then, and this counter has also reported weak set of numbers. In fact, at the EBITDA level, the company has reported a loss this time around to the tune of about 0.4 odd crores versus a profit of 10 crores that the company reported same time last year. So clearly, weak set of numbers that Premium Explosives has reported for the fourth quarter. Rubicon Research, meanwhile, from the pharma space, has reported better than expected set of numbers. It has reported strong growth on the top line. Revenue has grown by a solid 44% on a year-on-year basis, and margins too have expanded to about 23% versus 20% that the company reported same time last year. So strong set of numbers that Rubicon Research has reported. Meanwhile, Lumax Auto Tech, that counter has reported strong set, 25% revenue growth. Profitability has seen a solid uptick of 51%. And margins have improved to about 14.3% versus 13.8% that the company reported same time last year. And this margin expansion was aided by enhanced operational efficiencies, enhanced operating leverage, and favorable product mix that the company did in the fourth quarter. Lastly, as far as JM Financial Services is concerned, it's a weak quarter for them as well. Revenues have seen a decline of about 5.5%, and a sharper decline has been seen on the profitability and EBITDA front. That's profit for you on your screens down 21%, and EBITDA too has contracted by about 15% on a year-on-year basis. So weak set of numbers that JM Financial reported in the fourth quarter. But let's shift focus to a couple of other stocks that will be in focus on the back of other news pieces, and Darshita is now joining us with a list of exactly that. Darshita?
Right, here are some stocks that could remain in focus today, and starting off with Cyient Limited, which has entered into a definitive agreement to acquire a California-based Tau Digital Solutions for an enterprise value of $218 million. Now, this acquisition strengthens Cyient's capabilities in AI native and product engineering solutions. Moving on, Godrej Properties has won the bid of a 23-acre residential land parcel in Greater Noida with an estimated revenue potential of around 7,000 crore. In the infrastructure space, NCC has received fresh orders worth rupees 1,837 crore during May 26, while PNC Infratech has emerged as the lowest bidder for the airport authorities of Indian EPC projects in Uttarakhand worth rupees 302 crore. On the pharma front, the news flow is mixed. Shilpa Medicure has received the 5 procedural observation following a US FDA inspection, while Jubilant Pharma's joint venture facility in Canada has received a warning letter from a regulator. On the positive side, Lupin received US FDA approval for its sodium sulfate, magnesium sulfate, and potassium chloride tablets. And finally, Mahindra & Mahindra has incorporated Mahindra Manulife Insurance, which is a 50-50 joint venture with Manulife Holdings, marking its strong entry in the insurance business.
Darshita, thanks so much for joining us with all those details. But shifting focus then, the textile industry will be in focus, and that is because the government has once again stepped in to support India's textile sector and suspended cotton import duties for 5 months to ease raw material pricing pressure, improve export competitiveness, and support margins for spinning mills and garment exporters. We have Rabinder, who is now joining us with more details on this. Rabinder?
Well, yes, our textile stock can be in focus in today's session as government has exempted a cotton import duty on cotton of 11% for the 5 months from June 1, 2026 to 31st October 2026, and including the basic custom duty and agriculture infrastructure and development cess will remain a suspend during the period. And this marks the second intervention by the government after a similar duty exemption was extended until 31st December 2025, and the move the moves come in response to persistent demand from the textile industry, which has been grappling with rising cotton prices, supply constraints, and pressure on export competitiveness. And industry players have also highlighted that the need for the high quality long stable cotton and challenges posed by the weak global demand and margin pressure, and the duty exemption is expected to benefit the textile sector by lowering raw material cost, improving cotton availability, and supporting operating margin for spinning mills and garment exporter. And it is also likely to provide some relief to MSME textile manufacturer and export-oriented businesses. And but however, the move could create some challenges for the domestic cotton industry. A significant increase in imports may put pressure on cotton price realization for the Indian farmers. And among the listed companies, spinning players such as Vardhaman Textile, KPR Mill, and Nitin Spinners are expected to benefit from the lower cotton procurement cost and improved raw material availability And garment exporters, including Gokaldas Exports and Pearl Global, could see better export competitiveness and margin support. And home textile companies such as Welspun Living and Indocount Industry may also gain from the lower input cost for the products like towels, bed in linen, and other home textile offerings. So, back of this textile stock can be in focus in today's session.
Okay, so the textile sector will be in focus on the back of that. Rabinder, thanks so much for joining us with all those details. But shifting focus to an ET Now exclusive then, IdeaForge enters FY27 with a strong order book. My colleague Akanksha spoke with the co-founder and CEO Ankit Mehta to know about the growth roadmap of the company and the impact of ongoing West Asia crisis. Let's listen into a slice of that conversation.
One of the things that has been needed by our customers has been the ability to help the soldier or the operator on the ground with capabilities that can make their life easier when it comes to observing the data on the drone, because the data on the drone at many times ends up being needing to be observed for a very long period of time. And there, when you are distracted at times, or where you get into a place where the data can be missed, you need the augmentation of AI to help you reflect onto those points that you would have missed otherwise from the human eye. That fatigue also sets in. So helping an operator in their mission has always been our objective, and we've been using AI to aid that mission for a very long time now.
Correct. FY26 was a very strong turnaround year for IdeaForge. Now that we have entered into FY27, so what are we looking forward to FY27? What does your pipeline look like, and can investors expect this growth momentum to continue?
See, in terms of the results in FY26, you have already seen that there was a very big turnaround there. In terms of FY27, since we already are entering the year with a good order book of about 300 plus crores, I think, and which has to be executed as we indicated earlier within the year. So there is an obvious uptick on that side.
Okay. Talk to us about the ongoing tensions right now in West Asia. So how is this impacting IdeaForge supply chain, both in terms of component sourcing and export logistics?
See, supply chains in terms of some of the global supply chains where some components do not get built in India or are not available at the same quality as what's acceptable to the consumer, as well as largely needs to be of an origin that cannot be, of a certain nature. In those cases, you do end up facing challenges with respect to supply chain. Also, interestingly, the oil and gas supply chain can impact local supply as well because of constraints in that direction. So both have been affected. We have to continue to bridge that gap. We have to work hard towards it. There are always pushes and pulls in terms of that when such a situation arises.
That's the word coming in from the management of IdeaForge. Meanwhile, let's also revisit what Asian markets are doing this morning, and GIFT Nifty clearly is suggesting a muted start for Indian equity markets, with Nifty implied open now sitting with a cut of just about 10 or 15 odd points. But we have Shanghai. That index is up 0.4%. Japanese market Nikkei index, that index is up 1%. And Hang Seng is also sitting with gains of nearly 1%. So Asian markets clearly are throwing a strong picture, but Nifty implied open is now absolutely flat as we speak. But that's all the time we have on this edition of the show. Thanks so much for tuning in. The market will come up next.